Very good afternoon, everyone, and welcome to today's uLaw webinar. The topic for today's webinar is Trust and General Reconciliation Demystified. This particular webinar has been accredited for 1 hour of professionalism CPD credits in the provinces of Ontario, British Columbia, and New Brunswick. I repeat, for 1 hour of professionalism credits in the provinces of Ontario, British Columbia, and New Brunswick, and the title that you would use when you sign up in your own Law Society portals to log this 1 hour would be Trust and General Reconciliation Demystified. Okay, and the title is very much available to you on our email, or if you go to our website under webinars, you should find the title as well. And in addition, of course, we're recording this entire webinar and will be available for you to consume as early as next week on our YouTube channel, youtube.com/uLawPractice. And please feel free to ask any questions that you may have during the session. Both myself and my support staff would be more than happy to help address those questions. Like every other uLaw webinar, today's webinar has this very specific agenda that we're going to be covering over the next 55 minutes to an hour. We're primarily going to focus on the reconciliation process. We're going to talk about what it is, different types of reconciliations that your legal office may need to do, depending on your choice of financial vehicles that you use within your firm, such as the trust reconciliation and general reconciliation. And of course, if you do not use a trust account, you necessarily don't need to have a trust reconciliation done. You focus more on the general reconciliation for the hygiene of your business. But if you do have a trust account where you accept retainers and you're putting money into your trust account, you certainly do have the need to reconcile these accounts on a regular period of time, and the Law Society has certain expectations out of you in terms of reconciling and following them with other documents that form the overall compliance package. And of course, as you realize, the reconciliation process and the outcome of that reconciliation process becomes a critical component of your audit, as your audit primarily focuses on the prudence of your general trust ledgers and journals. So it's very important that you reconcile your accounts on a periodic basis, recommended at least once a month, so that, as I mentioned earlier, the prudence and the sanity of the financials in those ledgers and journals are up to date and are right. We'll also talk about some of the core aspects of an audit-ready financial management process, but keeping the agenda primarily focused on the reconciliation steps and how a proper reconciliation pretty much leads for you to generate the necessary audit readiness documents post that. Time permitting, we'll walk you through a quick live demo utilizing uLaw just as an example in terms of how you go about the reconciliation process, the documents that follow suit once the reconciliation is done, and how using the right tools should enable you to do these faster, spending less amount of your time. Most of our sessions, especially the ones that touch financial accounting, starts with a basic understanding or looking to give you a better perspective of the evolution of the process and the tools that have been used over a period of time to help you as a legal practitioner and legal firms not only record, transact, but also generate the necessary documents needed for audit readiness. And of course, starting with a manual double entry system, if I can just quickly annotate here. So if you really noticed, we still have a lot of practitioners, depending on the nature of the business, using a manual way of doing these things, and it still is a acceptable system, except the fact that it is very time consuming for you to do each and every document yourself manually. But given the nature of your business, if that's what you have signed up for, then it certainly is something that you can still do. But keep in mind that you are now mandated to ensure that the document, the outcomes, the templates are aligned with the expectations of the law societies of your jurisdiction. Okay, and it can be time consuming, especially if you have a large number of files that you have to manage within a month, for example. And has evolved from manual double entry to OneWrite systems to one of the more common available tools that definitely reduce the amount of manual entries. There's a certain level of calculations and arithmetics that you can do with spreadsheet software, right? There are a few calculations, summations that can help reduce the amount of manual errors. And from there has evolved a general accounting system, which is not purpose-built to manage trust money, because there's a certain nature of the business when you're dealing with trust. The locks and boundaries that you have to set in terms of how you operate, withdraw, and deposit money into trust, and how that needs to be now reflected in a template, how that reflects later in the reconciliation process, ensuring there's not overdrawn, and managing trust balances, etc., etc. But so the general accounting software is, if you don't have trust, of course, you should certainly explore the use of that. But again, not purpose-built for legal accounting. And then through time, you have these legal accounting softwares, and they have evolved over time as well, right from PC-based to now with today's day and age having cloud-based systems, faster ways of entering data across devices, easier ways of reporting these documents with one-click buttons, the ability for you to import bank statements so that you can easily compare and contrast. And so this is where we are today. And this pace of building tools, the necessary steps that you as a practitioner can take advantage of, is only going to evolve and get better and better. Okay? Just so you know, these are the options that you have. There's quite a few tools. So if you search up legal accounting software, Canada being one of the countries that certainly does have, I would say, audits and compliance checklists on a regular basis. If you are practicing within the country, this is something that you should certainly research upon and have the right tools based on the nature of your business. Now, in all those things that we just discussed, the key aspect is the balance of the amount of time that you spend in appreciating these tools, appreciating the process, and understanding the amount of time and effort and money that goes behind generating and complying with the Law Society's guidelines. But let's talk about the process itself. So let's understand that there are many tools available that can reduce the time, but they all follow or should follow a certain guideline that has already been set up by the law societies of your different jurisdictions. So if you're joining from different provinces, beyond a point they don't differ, but the way certain data components are expected may vary. Certain specific documents such as Form 9A may be specific to Ontario. In other provinces, they may just call it an electronic transition or requisition form. So each province has some nuance to it in terms of what they expect, but the reconciliation process and the actual steps to be taken pretty much in a broad brush remain to be the same. Okay. So before we actually get into the concept of reconciliation, let me once again set the stage. So considering you're a legal firm or a legal practitioner, right? And of course, you're now intaking clients. In our previous webinars, we've discussed how you do that. You're creating matters. You've done all the due diligence. You've done your conflict searches, and you've created the matter. Now, once you have created the matter based on your retainer or engagement letter, based on the boundaries that you've set for that specific engagement, you start the next series of steps of how you do business with your client. So if there's a retainer involved and you're accepting that retainer from your client, then first and foremost, you ensure that that form of money that's being received from the client is deposited into the right trust account, whether it's a mixed trust or pooled trust, however you like to call it, in a financial institution of your choice, and you deposit that money specifically into that trust account. Now, when you do so, what's important is for you to also have a record keeping of when that particular transaction actually occurred, and some, I would say, details, as the devil is in the detail, a few details that are important as part of that transaction, right? Such as the date, the amount, what was it for, how was it received, so that not only does it allow you to have a better appreciation when you're reconciling, because you now have a better understanding of what this money is about, but also it enables you to deliver your ledgers and journals that do ask for these details. Okay, so kind of the prerequisite to this whole process of reconciliation is proper data entry and timely data entry. And, given the nature of your business, and if you haven't been able to enter these transactions on a periodic time basis, then at the least you should catch up before hopefully the month end, so that you can be very confident about all the transactions that have occurred in a specific time period that you're reconciling. It makes it easier for you to reconcile, let's put it that way. You could always have transactions before and after that can either be carried over depending on the nature of those transactions and when you decide to reconcile. But as a key rule, what would be ideal is that you enter and find a way to record keep, and as we discussed, so many other tools that you have in your arsenal to utilize to record these transactions to begin with. Now, once you have, let's say, you've got that retainer in, imagine a day-to-day activity around a file. So you could now be actually docketing, dispersing, right, doing your work to progress that file towards a logical closure. And as you progress, there are many more activities that start to evolve within that file. And of course, you have to make your money. And hence, the law societies have devised these nice rules where if you do have a retainer, of course, making sure that all of this is well written in your retainer letter. But once you do have the retainer and you're able to show proof through an invoice of your effort and the disbursements that you may have paid for, then you are now able to do a trust transfer. And when you do that trust transfer, it really means that now money is moving from the trust account into your operating account. Okay? And the reason I state this is in all of this, there's money that's entering the trust account, money that's leaving the trust account. And on the other side, you have money entering or leaving the general account depending on the business. The reconciliation process is nothing but a way for you to compare or contrast and confirm the transactions that you have recorded in your record keeping, whether it's a manual system or a sophisticated legal accounting system, comparing that with the financial institution's books, which you may receive as a paper statement, or you may log into a web to review it electronically. Right? So financial institutions have their own record keeping on their sites. So your debits and credits mirror that, and that's their debits and credits. Okay? Or let's say deposits and withdrawals is mirrored to be their credits and debits. So now, through this reconciliation process, you're now comparing, and you're really trying to make sure that the transactions that you have recorded as per how you've done it, and marry that or compare that with how the transactions have actually done or showcased in your financial institution. Most certainly, the financial institution would be a record of truth because the money actually has entered or left. Sometimes, through the reconciliation process, which is also an important reason why we actually do it, you're able to find any anomalies that there may be in the differences that you may find when you contrast the record-keeping system with the financial institution. So let's first agree that the reconciliation process is nothing but a match the following between your record-keeping and the financial institution. And in an ideal world, you want to make sure that every transaction that you have in the bank or a financial institution matches the record-keeping system, vice versa, so that you're now able to clearly and confidently declare at the end of that time period the balance in the trust account. So there's a quick question about the nature of the CPD, and as you can see in my text, it is a professionalism CPD credits, 1 hour of professionalism CPD credits. Now let's now dive deeper into the trust reconciliation process in itself. There are 4 major data elements, as we like to call it, that are captured or are necessary to be captured within a trust reconciliation report that you have to generate, let's call it on a monthly basis. Okay? You could be doing it daily, weekly, but typically an auditor would look to have you submit or show them rather, a monthly basis reconciliation report. Okay? So let's say it's monthly for now. And let's say you're reconciling at the end of every month. You have these 4 data elements that need to be captured and reflected. So especially if you're doing this a manual way, very important that you follow these 4 steps so that you can stay in compliance. And what are these 4 steps? The first step, as you could see, and it's really clearly articulated here, is recording the bank statement and the balances. So you open up your financial institution. We're calling it bank, but financial institution, as we know, a lot of our legal practitioner friends have credit unions that they work with, right? So really looking at your financial institution's balance on that particular date that you're looking to reconcile. So for the month of May, if you're reconciling on the 28th of May, or if it's for the month of June, you're reconciling on the 30th of June, whatever that date, you want to first capture what's the balance in that bank account of that trust for that date. Okay? The second, and this is where we're able to understand or slowly introduce these sanity checks, this litmus test to understand the anomalies. This is recording what we call outstanding checks and deposits, and understanding if there are any errors from the financial institution side. And we've given these examples many a times. So let's look at a bank error to begin with. If you've just gotten started with your legal practice, and this is something you may find often, and if you've just opened up a trust account, it used to be in the past with certain financial institutions, they would appreciate and understand that this is a trust account dealt by legal practice, and hence it should be left untouched, and any bank fees, for example, should be now withdrawn out of your operating account and not from your trust account. But sometimes financial institutions may withdraw the bank fees right out of your trust account, in which case, if you catch that error, so if you're reviewing your bank statement at least on a weekly basis, you would realize that, oh my God, they just withdrew $10 from my bank account, my trust account, and that now disturbs this, purity, for lack of a better term, of the financial record keeping, because I cannot associate that money with any client, right? Predominantly, money coming in or leaving a trust account can always be audit trailed back to a client. So you're not paying your office expense, you're not paying for your phone bills unless warranted out of your trust account. You're paying for bank fees application fees or court fees out of the trust account, not bank fees, right? So bank errors are one of the anomalies that can shift the balance between what's recorded on your record keeping to what's recorded on the financial institution's system, okay? So if the bank has withdrawn $10, that's a negative 10. You may have not accounted for it at all till you saw that on the bank. The second possible reason could be where someone gives you a retainer check. You take that check and you've been very due diligent to record it into your record-keeping system. You wrote it down real quick on your Excel sheet, or you quickly logged it in as a retainer into your legal accounting system, right, with the date and all the transactional details. Fantastic. But you forgot to actually deposit that check right away into your actual financial institution. So let's say you dropped it in your wallet, your purse, maybe dropped it sometimes in your office drawer, and of course, post-COVID, that's not even a statement to be made, but let's say when we do go back, that's a possibility. In which case, when you're now looking at your financial institution's statement compared with your own record keeping, your record keeping books would say, oh, here's another $1,000 extra, which has never entered the bank, right? How does something enter the bank unless it's a direct deposit or you deposit it, depending on your situation? If it's a check, of course, it's your responsibility to deposit it. So now take that example. If you are to catch that only at the last minute or at the fag end of that month for reconciling, okay, and let's say it's, of course, today's technology, you're able to take a picture of a check and deposit money, so it really depends on your financial institution's technological features and functionalities, but let's say you're unable to deposit it in time, that leaves with a reconciliation statement where you need to justify as to why the bank has $1,000 less compared to your record keeping, which has $1,000 more. So this is the way of showcasing it, not only to yourself, but to an auditor when they ask you for that anomaly. Consider another situation, which could be completely the other way around. You've got the money, you took the check, ran directly to the institution, you deposited it right away. But in all that fun stuff, you forgot to enter it into your record-keeping system. Comes month end. You now compare, and the financial institution shows $1,000 more than what your record-keeping does. Now, this can be a bit tricky. When you see $1,000 more, this is where backtracking to really understand the audit trail of where did that $1,000 come from is very critical. This is where it's going to test your memory. And sometimes what happens is if you are in the habit of getting a certain retainer in a certain dollar amount, right? If certain legal firms might just say $1,130, for a certain type of matter, they may have set up saying standard retainer, first retainer is $1,130, or whatever may be the retainer you agree upon, $565, whatever. And if you see multiple 565s and multiple 1,130s, and you suddenly see that there's just 1,130 extra, unless you have a great memory or you've written it down, or sometimes it takes a lot of time, depending on the number of files that you may have in a particular period of time, for you to backtrack and really understand and associate that retainer to a specific client. That's why it's, again, very important that you stay on top of these things at least on a weekly basis so that it's fresh in your memory and it's easier to say, oh yeah, that 130 was for Alex Smith for this particular matter. I remember that. And if that's the case, what you can do, and it's easier this way, is once you've figured out for who it was to begin with, you go into your record keeping system, update the system, and then the numbers match. So you have your outstanding deposits, outstanding checks. Another example of outstanding checks could be where you have written a check to a third party, and they have not yet encashed that check. Okay, so if you have written a refund of a retainer, you have accounted for that refund out of your record-keeping system. But unless the other client party deposits that check into their own account, that money is not going to be withdrawn out of your trust account, right? In which case the bank is going to have more than your record-keeping system. So these are some of the reasons why reconciliation is such a great idea, to keep a close tab of possible anomalies that may shift the balance of numbers between your record-keeping system and your financial institution's statement. And this reconciliation process highlights the reasons and the truth between these two numbers. The third, which is very, I would say, unique to the trust reconciliation statement, is recording what's called as a client's trust listing, otherwise called as client trust balance. Sometimes auditors may ask you just for your trust balances so that they know who are all the clients that have money still left and have contributed to the trust account. Okay? So this, especially if you're doing this the manual way, this is a very important task that you want to keep in mind, that's changing every day depending on the nature of the business and how money is moving in and out of the trust account. So as you can see here, you have the client's name. Very important to capture the last activity date and the actual amount that's still left in his or her trust account. And the summation of all those different remainders of the trust account across your clients adds up to the final balance that should pretty much match up with your reconciled bank balance on that particular day when you're closing the reconciliation. So if you see you have $40,000 as per the bank balance statement, you have $39,000 of outstanding checks. And how did that come about? You had 3 checks. Maybe there's a real estate transaction that adds up to 39. There was also an outstanding deposit. Maybe you did not deposit the money of $250. In addition, there was also a bank error, kind of a triple whammy here. And all that adds up, leaving your balance at $1,715. And how did that match with? It matches perfectly. Okay? And that's what you finally declare in step 4 as the number between the trust bank reconciled trust bank balance number to the actual trust ledger that so this is the bank statement. The second line item is what you have captured in your record keeping system. Okay? So 4 steps. Easy peasy. Now, the same thing applies to the general reconciliation. The overall essence of why you do it remains to be the same. Now, an added advantage of doing your general reconciliation is it also increases the prudence of your own business numbers. So, if the general accounting system that you're mostly reconciling is your operating account, for example, then you can be certain of the money that's come in and money that's left. So, potentially the money that come in is the revenue, money that's left are the expenses, and hence, like a typical monthly P&L can be pretty much written once you have a general reconciliation is done. But often we find, because the sensitivity that's given to trust reconciliation is not often associated with general reconciliation. So many times legal firms may wait and may not be as strict about reconciliation processes that they do for trust compared to how they operate their general reconciliation. And that's just because most often it's time consuming, especially if you're doing this a manual way, or you have lost track of it and there's a fear factor of how much you have to catch up that pretty much stops you from moving forward, right? And so it's just a quick change of mindset and the right tools, the right support, the right help that you can get to get back on track. And hence we recommend at uLaw that if possible with the right tools, you should be able to do both trust and general reconciliation in minutes, if not hours, comparing it to the number of sometimes the days that it can take if you're doing this a manual way. But the general reconciliation document, or let's call it general reconciliation report, has 3 steps or 3 data elements that you're capturing. It's pretty much the same as your trust. The only thing that's missing here, which is not required, is the client's trust listing. So you don't have necessarily a trust listing similar to what you have. So if you really look at my step 3, which is trust listing in the trust reconciliation process, you don't see that here in the general reconciliation report. Okay. Other than that, it's pretty much the same. You have the bank balance, outstanding deposits and checks, and the final comparison of it. Okay. Now, what goes inside these numbers and what was it for may vary, right? Because this is, let's say, an operating account. We have legal firms who actually reconcile every possible general account that they have for their legal business. If you're a solo practitioner, you can even reconcile your own personal numbers, right? Because then that is one step further. You're making your own internal P&L valid, right? But keep in mind that the general reconciliation and the trust reconciliation predominantly is for your business. Now, what pieces of information do you need to get started with this whole reconciliation process? We believe that it can be broken down into 3 simple pieces of information that you need. First, you decide the date when you're going to be reconciling. So it could be a month end, or it could be a week prior to month end, whatever you choose to. Or if you're reconciling every week, it would be that week end. So choose a particular date, and that's the first data entry or component that you would utilize to generate this report. The second piece of information is knowing the bank balance or the financial institution's balance as on this date. Okay? So you do have to log in into your financial institution's webhook, or you can get the printout and see what the balance is on a particular date. The third piece of information are understanding all the transactions that you have recorded within your record keeping, so that now you can compare them with your financial institution's statement. So these important pieces of information or steps of execution are all that you have to keep in mind when you're thinking about a reconciliation process, whether it's trust or general. And this particular slide, again, we've already discussed this, or I mentioned this in my previous slide as well. Why are we being asked to do the reconciliation step, right? What benefit does it give me beyond the compliance nature of the requirement? We believe the reconciliation process, right, beyond the compliance, allows you to catch two important issues that we overall find within legal firms. One, it allows you to find out and catch all the transactions that you have recorded in your accounting system or your record-keeping system, whatever you may want to call it, that do not necessarily match with what the financial institution statement is talking about or their record-keeping is talking about. And the other aspect is, so again, let me boil it down to simple terms. When you reconcile, you find, hey, do I have a transaction more in my record-keeping system and it's not there in my bank, which means I got to search for that check that I have not yet deposited into the bank. Or if it's the other way around, there's two things that could have happened. One, you have not recorded the transaction in your record-keeping system, or the party to whom you've written a particular check has not yet encashed it. In both these cases, you can take the action. In one case, you can enter the information into record-keeping system. Second instance, you can call the client or that other party and ask them to make sure that they deposit that check so that your numbers are matched. Typically, you would have seen this when you're doing real estate closures. If there's any money that the legal practitioner owes you after the closing, if any, they would send you a refund of the retainer or whatever money, right? And often they would follow up with you and ensure it may be a very smaller dollar amount, like less than $10 sometimes, but they would still follow up to say, hey, can you please make sure that you deposit that money? If not, I may have to cancel that check and reissue another check, because they need to close their books and account for that $6 having left their record-keeping system, because ideally it shouldn't be their money, right? So these are the two important aspects of the reconciliation process. And a byproduct of doing the reconciliation on a regular time period, or byproducts of that good habit, are the following. One, you can be very confident of your accounting system being up to date, and there's a certain confidence and there's a certain level of happiness and peace of mind that you may have knowing that your accounting system is up to date and you sleep peacefully and you're not worried too much about having to catch up. Okay, so that's a very intangible benefit which we find within legal firms. They're more confident about their numbers, let's say. You're certainly audit ready, because the fact of the matter is the audit, is nothing but ensuring that you have all these regular steps being taken at the particular time period. Because the audit is nothing but for you to showcase the sanity of your numbers through the reconciliation process and all the documents that follow that, the ledgers, journals, etc. You're even ready for filing your taxes, especially your business tax, if you're going to be, or HST, or GST, PST. You can be very confident of paying those, because if you have reconciled, you can be confident of the money that's come in and has left, and you've validated these numbers, yeah? So you can be very confident that, yes, I got the $1,000, I spent the $700, $300 is my P&L, and that adds up, of course, over a monthly basis. And depending on your cycle, you could be paying your GST, PST on time. You could be paying your business taxes on time. Top three is pretty much what we consider are the reasons why you should, reconcile on a regular basis. Some other good reasons that you should consider is you can drive quite a bit of good business analytical insights about your own business. So knowing how much money you've got in, knowing how much of expense you've spent, and knowing for certain that those are the actual numbers allows you to make good, informed business decisions, I call them. So if you know for certain that your expense for that month, because you've reconciled it so you know, is higher than what it was over the last 6 months, then gives you the ability to deeper dive into that particular month and understand what happened for that expense to be that high. Maybe the rent went high, maybe you're paying higher for certain, or maybe you're taking up a lot of files where you pay for disbursements up front. Maybe now you start to think, should I switch to a retainer model so that I'm not spending all this money up front and waiting to recover? There could be many answers to the questions that you can ask based on the data that you've discovered. Okay? And are you audit ready if your reconciliation is done for that time period? Absolutely yes. It's an astounding yes. Because once you have completed the reconciliation step, then you've pretty much agreed to the transactions that exist between your record keeping and the bank. And as I said, you can confidently cement the actual numbers, and hence ledgers and journals are not really a representation of the numbers in a certain template format. There's no manual intervention. There's no tweaking of numbers. It's reflecting the numbers that exist. But the reconciliation process is certainly a task that you have to involve yourself to compare and contrast. Whether you do it, or whether your assistant does it and asks you the questions, right? Often, if all the numbers match, you don't ask the questions. When the numbers don't match, that's when you're, diving deeper. And if your assistant is doing it, or if your accountant is doing it, they're going to come back to you for answers. So the answers need to come from you so that you can tell them, yes, I got this money for this client, I forgot to put it in, so please put it in. Right? Often, if you think about it, you're the one as the legal practitioner who holds the reins, and you have the answers. Your assistants or people who help you take those answers and enter the data accordingly. But the ledgers and journals are just a mere representation of numbers that are in the system. And all reports are nothing but representation of data in a template. So once you have the most important step, reconciliation, done, generating the important compliance reports is just a click of a button. So you can download this from our website. It's available for you to find as checklists. If you're a current uLaw customer, you can download this right from our help. Pretty much gives you a checklist of key questions to ask yourself to improve the hygiene and the financial numbers of your business. Okay? And this goes back to your retainer letter, goes back to how you manage funds, because the reconciliation steps, the prerequisite to that is ensuring that the numbers are recorded, right? And how numbers are recorded are determined based on the nature of the business and how it's being recorded. If you have a retainer, accepting the retainer. If you don't have a retainer, then it's just a general account. Straightforward. If there's a certain pattern of how when you raise invoices, then you move your trust money based on that cycle, right? You can't do it prior to that. Of course, this is a final plug to really, for you to think about in your current situation, how are you managing generating and reconciling and generating these documents for your legal firm? And I think our sales pitch to you, for lack of a better term, is to find the right tools, especially explore the purchase of legal accounting systems or the right help through services that have been in this business and know the legal aspect of it, so that you can focus on revenue generating activities. But as solo practitioners, when time and money is tight, if you can find the right tool, and just ensure that you're capturing the data on time. The tools today, including uLaw, allow you to reconcile and generate these documents faster. There are definitely tools for you to compare and contrast. We're not the only ones. There are others. As I said, legal accounting is just a search away for you to explore those tools. Okay. With another 15 minutes left, I was pretty fast with it. I want to take a quick pause to ask if you have any questions with regards to everything that I've been talking about over the past 45 minutes. For friends who did join us a bit late, I want to recap that today's webinar on Trust and General Reconciliation Demystified is a 1-hour professionalism CPD credit webinar. So you do get 1 hour of CPD credits for attending this webinar. It is being recorded, will be available on our YouTube channel as well. And the key agenda that we went through, and hopefully I was able to do some level of justice in explaining the agenda better, is around the reconciliation process, especially around the trust and the general reconciliation process. The transactions that you record and how you reflect the differences between the reconciliation documents between trust and ledger, and how a proper reconciliation automatically translates to you being audit ready to generate all the ledgers and journals that go along with that monthly compliance checklist. So let me pause to ask any questions that the audience may have before I move into a demonstration, just to give you a feeler of what you should expect. Okay, we do have one interesting question around bank errors. How do I deal with bank errors prior to a reconciliation step? I'm assuming your question is, how do you deal with bank errors? Now, it really depends on the timing of it. If you do find the bank error earlier in the month or prior to you reconciling, what we've seen is legal firms often would reach out to the bank or the financial institution and ask them to reverse the bank fees or take that bank fee. So let's say they withdrawn $10 and you catch it early in the month. You're able to now call the institution and let them know that they should be taking the money out of their operating account, in which case the financial institution may take a day or two where they would put the money back into your trust account, so put that $10 back, and then they would withdraw the $10 out of your general account. So what happens is on, let's say, June 4th, the $10 was, or June 1st, the $10 was taken away, and then June 4th, $10 was put back. It kind of nullifies the whole bank fees. So when you reconcile end of June, you can pretty much neglect that that even happened, yeah, because it kind of nullifies it and it's just balanced out. But if you realize that only on the 28th of June, and it's too late for you to call the bank and for them to make that adjustment, then you reflect it, like you see in this particular slide, as a bank error and state that as the reason why the bank or the financial institution's numbers would be $10 less than what you have in your record keeping. Okay? So those are maybe the two ways that you can deal. But so if you do a quick check on a weekly basis, and you're able to catch these errors early, then you can make some quick adjustments to avoid, or if not, you reflect them as a bank error. And the same thing applies to deposits and checks. Okay? Any more questions? The title for today's webinar is Trust and General Reconciliation Demystified. Okay. Continue to please send us your questions as I move real quick from my presentation slide to a demo. So I'm logged into a fictitious legal firm, solo practitioner Roger Moore, and this is the uLaw account as a way of representing this. And if you look at our compliance and the monthly compliance, starting with the trust reconciliation process. So you have the date. So let's say I had not reconciled the last couple of months. I would choose, let's say, the month of April. What happens is these are all the transactions that exist that have not yet been reconciled till the end of April. So if I look at March, you can see there are no transactions, which means it's a great sign, which means it's been completely accounted for and reconciled. And when I move into the month of April, I find here are all the transactions that have not yet been reconciled for that month. So this is where you'd open up your financial institution's statement. You would download the April statement, and let's say your balance as per the financial institution is that. Now you would pretty much account for each of those transactions. So for example, on the 10th of April, there was a trust transfer of money. So $802 was taken out of your trust account. And what was the reason? And this is the beauty of a legal accounting system when it acts as your record-keeping system, is that it gives you the ability to completely explain the reason behind every transaction. If you were to compare this with your financial institution, you would notice that this description would not be as elaborate and as easy to acknowledge. This would be a simple description that just tells you that this happened, and mostly it's a number. So you might find $802 out of your trust. Why was it the case? It's important when you think about reconciling, so it's easier for you to acknowledge the reason for it. So you can decide to say, all right, as per the bank statement, when did this reflect the bank? So maybe it was the 6th. You can change the bank date. So this transaction has been accounted for. It exists, right, in your record-keeping system. It exists in the bank as well. So likewise, you go through each and every transaction. Now let's say this particular $100 transaction does not reflect in the bank. Then you leave that unaccounted for, which means typically your bank balance would be $100 less, right? Okay? So that's how you go about comparing and contrasting each and every line item between your record-keeping system and the bank. And when it comes to reconciling, you just, once you've agreed all those numbers, you just generate the report. And the same thing goes for the general. Of course, with the general, it really comes down to how much of general accounts you have within your business. And you can do the same thing for a specific date range. And you can see within the general account, the $802 was the same number on the 4th that was moved from trust to general. that's been accounted for. You can see there's close to 13 transactions in the general account. So I can then go ahead, and this is the only step where it can be a little bit of time consuming. I'm going to open up the trust reconciliation report. You can see the first step is the balance per the bank statement. Were there any outstanding withdrawals, deposits, any bank errors? If there are any, you can enter that right in that little pop-up that we had. So let me show that to you one more time. You can see you have outstanding payments and bank errors. If there is a bank error, if they've withdrawn $10, you can just say it's negative. Sometimes if they deposit any interest accrued in that bank, in that statement, then it may be positive. So the bank error may be negative and or positive. So in which case, you would declare whether it's positive or negative. So that's how you enter the bank error. And these are all the transactions that have cleared that month. But this is probably the most important step that the legal accounting system pretty much accounts for, which is the trust listing. So if you have 400, and again, this is a playground account, and hence the numbers are really wacky. But if you've got almost $477,000 in your trust account, the reason that it is because of all these clients having the trust balances, right? Now, the law societies do have certain guidelines for how long you can keep those trust balances, right? So, for example, you can't go beyond a certain term period without notifying your client and sending a refund. And that's what we also give you in a color code as to how old they are. So if it's beyond, 8 years, this is 2015 till now, about 6 years. And the more closer they are to the current date, they get black. But if they're beyond 8 years, they start to show up in red, in which case you do have to call those clients, let them know that nothing really has moved, and then you decide what to do next. And all this adds up to the 493, and the 77 is basically the balance. Okay, and the reason is that you have the 2,000 is pretty much the total transactions that have cleared. Okay. Now, the minute you've reconciled, and this is pretty much what we're talking about, the byproduct of a reconciliation step is to give you all the ledgers and journals. Generating the trust ledger, and let's say you want to do it for the month of April. You can pretty much just choose the date range and download the document. So as you can see, this is your trust ledger for the month of April, from 1st to the 30th of April. The fact that you've reconciled, you can be confident about these numbers. Okay? And generating all the other documents, so your trust receipts, your trust ledgers, journals, are just a matter of clicking the button because they're just reflecting numbers. And here's your trust journal of your receipts, all the money that you received into the trust account. Okay? And this goes back to the actual reconciliation where you have agreed that $12,000 entered or that was the receipt of the trust money, and that's the amount of payments or money that's left the trust account. And that would be the trust payments. Okay, so in terms of the actual process of reconciliation, as long as you have your numbers, your bank statements, and you've done a good job of record keeping all the transactions, sometimes it's just a matter of minutes before you can reconcile. If you do have a trust account and for whatever reason in a particular month you have no transactions, you can also generate what is called as a $0 reconciliation, which pretty much says that I have, reconciled this month and there's really no numbers for me to show for this month. Okay? That's a question we're often asked. If nothing's really happened that month, should I or should I not? Often you don't necessarily have to, but if you really want to be thorough, then just generating a $0 trust reconciliation statement doesn't really hurt. So with that, I'll kind of draw today's webinar to a close, and of course, open up the floor for any questions that you may have. I know there's some good questions earlier on. And certainly want to thank you for participating. So I'll definitely draw a closure and wait for any questions that you may have. Oh, right away. Okay, I will show you the general reconciliation. It's pretty much the same step. The same process of the steps remain to be the same. You choose the month end. Let me choose the same April. Okay, so here are all the 13 transactions. And you can change the bank date based on if there are changes in the bank. You can see this is a different balance. And within uLaw, one other thing you can do is you can preview. If you're doing this on a weekly basis, which is really just ensuring that you're on top of the numbers to compare them, you can do this on a weekly basis. And when you're ready to reconcile and generate that one document for the month, so let's say you want to go with one document a month, you can review it 3 times a week, and then the 4th week, you can catch up on the 4th week only, because we mark them in blue and red and different colors so that you can be confident. It's really a time saver, really. That's all it is. And here you go. Here's your general reconciliation statement. Hope that answers that question. It's just under, or the trust and general reconciliation are very much available right under monthly compliance. Oh, thank you. Appreciate the question. Are there any more questions, please? Yeah, at all times you can reach us at support@uLawPractice.com. That's our email address that's shared across the company so that we're able to act on any request real fast. Let me stop the recording. Once again, thank you everyone for joining. I'll continue to stay online for any more questions.